In this video, I'll discuss Q1 FY26 result and Concall of Angel One. So Angel One is a full-fledged broker, and with that broking business, they also run a wealth management business and a AMC business. Okay, but majority of their revenue comes from their broking business. 60% of their revenue comes from their broking related business through brokerage, and another 30% revenue comes from the interest earned from the MTF book. Okay, so that is their revenue mix. So 90% of their revenue comes from broking business. Okay, so that is the point. And also they have 16% market share in the demat account in India. So they have a good kind of market share, and in terms of the market share gain also, they are gaining market share in every quarter. I will discuss it later. So that is the thing. And another one thing which is they are looking for the growth in tier 2 and tier 3 cities, because if we look at the demography of India, most of the investors are from tier 1 cities, but the next phase of growth will be in tier 2, will be from tier 2 tier 3 cities of India. So that is where Angel One is focusing now. And many of the companies, if you hear the Concall, if you hear many companies management, then you also know that many of the companies telling that the incremental growth of India will come from tier 2 tier 3 cities. So that is the thing Angel One also saying. Okay, so that is the thing. So let's talk about the result of Angel One in Q1 FY26. So if I talk about the overall result, it is a mixed bag. If you look at their quarter on quarter number, that is improving. In some case that is improving, in some case that is in a flat manner. But if you look at their year on year number, that will not make any sense, because in the last 1 year, if you look at Q1 FY25 versus Q1 FY26, in this time, in this 1 year, lots of things have happened. Like there is SEBI's crackdown on FNO. There is a market decline, market slowdown. If we look at from September to March, market declined by 15-20%. So all of this resulted in a year on year decline in every aspect. But we have to track the company, track this kind of capital market company quarter on quarter, because it is like a cyclical kind of a sector. If you look at the stock broking and all, so that is the thing here. It is like a cyclical sector. That is why we have to keep tracking quarter on quarter result more than the year on year result, and that is the thing with Angel One also. And if we look at their year on year revenue, as I said, that all the parameters are degrew, but the management is expecting the parameters to be at the level of Q2 FY25, Q3 FY25, in Q4 FY26. By the end of FY26, they are expecting their performance to be in the level of the highest, which was at the time of Q2 and Q3 of FY25. So that is the thing management is expecting, because if you look at their revenue also, that is down by 20%. So that is what I am saying, that management is saying that, expecting that the growth will normalize by Q4 FY26. So that is the point here. If I talk about their client base, there is a good kind of increase, as I said in the opening remark also, that their client base is growing at a good pace, because in the year on year case, they grew their client base by 30%. So again, good number in terms of the client base. Also in terms of quarter on quarter result also, they grew their client base by 5%. So that is a really good number. If I talk about the gross client acquisition, that grew year on year by 40%. So that is what I am saying. But in the quarter on quarter number, if we look at it, it is around 4%. 4% degrew by 4%. So that is the point with gross client acquisition. But if we look at the whole market, they gain the market share, because if we look at their incremental demat account, market share in incremental demat account, that percentage increased in Angel 1, because in FY25 the incremental demat account opening in Angel 1 was 21%. Now it is 22% in quarter 1. So yeah, they are capturing the market share of new customers. Okay, so that is the thing. It means that out of 5, 1 out of 5 demat account is opening in Angel 1 in Q1. Okay, so that is the point here. So in the client base, they are getting a good kind of attraction, because they are advertising in IPL. So IPL is a big thing. Everyone in India, if you see, if I am not wrong, 50% of Indian male watch IPL. So that is the thing here also. If I talk about the cost of acquisition, that has been in the similar range. The management is saying that cost of acquisition is in a similar kind of range in quarter 1 FY26. So that is the point. But one thing which is negative but expected, that LTV to CAC, it means that lifetime value to cost of acquisition of client. It means that let's say if a company let's say, what is LTV, lifetime value? What is LTV is that if a client in his lifetime will generate like 10 crore revenue to a company, so that is called LTV, the lifetime revenue generated by a client versus cost of acquisition of client. You already know that. So that is the point where there is a decline. Before Q1, before those SEBI regulations, Angel 1 was expecting a LTV to CAC to be around 8x. Okay, but now in Q1 FY26 they are expecting a LTV to CAC of 6x. So there is a decline of 2x kind of a number. So that is a negative thing, because we all know that there is some kind of FNO regulation, and FNO is a big contributor in terms of the revenue, because if we look at their revenue breakup also, in 45% of revenue comes from the FNO segment. So that is why there is a decline in LTV to CAC. So it is likely to stay here, may increase in future, may not, but we have to track, may also decline. So that is the thing. So if LTV to CAC value keeps getting up, then it is good for a company, but if it is keep getting lesser and lesser, then it is bad. So that is the thing here. Then if I talk about average daily order grew quarter on quarter by 6.5%, but again year on year it degrew by 27%. It is expected that, it is absolutely expected, because all of the FNO, all of the market crash, not a market crash, but it is a market correction, resulted in a lesser average daily orders. So it is absolutely expected. We have to track the number we have to track quarter on quarter number, which is at 6.5% growth in terms of average daily order. So we have to track it quarter on quarter. That is the thing. So in terms of these parameters, as I said in the first also, that the result is a mixed bag. Okay, we have to track it, that where all the parameters are going, but I think it is over and the worst part is over. So let's continue. In their MTF book, MTF book grew by 60% in this quarter, year on year. So that is a really good kind of growth in terms of the book, in terms of the funding book. So that is the thing. Quarter on quarter grew by 4% in this quarter. So in terms of the growth of MTF book, that is really good. But see one thing, MTF is a completely market depending product, because if there is a traction in the market, if the market is going up, then more and more people would like to take loan and get invested. But if the market is getting like what was the condition in January, February, March, if that kind of market returns, then all the MTF position will be squared off or like that. Okay, and the traders also take the back step. So that is the point here. It is a completely market related product. If the market keeps getting up and keeps getting in a good position where the orders are good and all the environment is good, then it will go up. Okay, so that is the point. But again, the increase in MTF book, because of they captured the client, they acquired the client. It is a completely, I think in my opinion, it is because of the market share gain. Okay, so that is the point with MTF. It is because if we look at the market, last year Q1 FY25 the market was pretty good, but in Q1 FY26 market is still down by I think 5-6% if I am not wrong. So but their MTF book increased by 60%. So that is a good kind of increase. So that is the thing. And also management is also expecting the growth to sustain in the future also. So that is a really good thing. And another one thing is that now the rate is RBI is cutting the repo rates, but the MTF book is more or less fixed. Okay, the interest rate are more or less fixed in the MTF book. But if the borrowings of Angel 1, which is in MCLR borrowings come down, MCLR rate come down, then Angel 1 will earn more interest spread. So that is the thing we have to see, that how the MCLR rate comes down and they get some kind of benefit out of that. So that is the thing. In terms of their wealth management business, they grew their wealth management business by 33%. So and 33% quarter on quarter. So that is a very important thing, because they started their wealth management business 1 year back, and now they are at 5,000 crore AUM. So there is a good kind of traction in terms of their wealth management business. In terms of their asset management business also, asset management business means the mutual fund business, that also grew by 350% quarter on quarter. So in the asset management business also there is a good kind of growth. Asset management business started in the I think in February March month, if I am not wrong. So it is a pretty new book, but yeah, that is why the growth rate is pretty high. and we have to see where this number goes. But if we see their mutual funds, that is more or less, I think the 100% mutual fund is passive, not active. So that is a problem. But if they can develop some kind of active mutual fund, then that would be really good. So that is the asset management business. And the company management also expecting the wealth management business to be break even before the asset management business, means that mutual fund business. So that is the thing with wealth management business. But again, it is a long journey. Wealth management business, asset management business is not a thing like you do anything you want. Because if you look at the Anand Rathi Wealth also, they are earning 100 crore per quarter, around 300 crore per year. So after those kind of 15-20 years of hard work, they are earning around what? They are earning around 300 crore per year. Whereas if we look at Angel One, their PAT is at 100 crore, which is greater than what? Anand Rathi's PAT. So that is the thing. 100 crore quarterly PAT, I am saying. So that is the thing. That is why I am saying wealth management business will contribute to the business, but it will be pretty less. Okay. So that is the point with wealth management business. In terms of the whole revenue, in terms of the overall revenue of Angel One, they grew their revenue by 8% quarter on quarter. So yeah, quarter on quarter there is improvement, but year on year again they grew by 19%. So that is the thing, and it is a expected thing. Market knows that year on year revenue will be less, but quarter on quarter result is pretty good. And the management is also expecting a 8 to 9% kind of revenue growth every quarter in next few quarters. So that is the point. And and in terms of the EBITDA margin, in terms of the EBITDA margin, in terms of EBITDA margin, they grew their EBITDA margin by 800 bps in this quarter. So that is not a good thing. But the management is saying that if they can grow at 8-9% quarter on quarter, then their operating profit margin, means EBITDA margin, will be better. Will get better in will get better with the 8-9% kind of revenue growth. So yeah, if they can grow at 8-9%, they will get some kind of operating leverage, because see, they have all kind of mechanism there, because they developed the app, they developed their sourcings also. So if incremental growth comes, that will add to the PAT directly. It will add to the PAT, it will add to the EBITDA. So that is the point. Management is saying that if we can grow at a 8-9% quarter on quarter, then we will get some kind of operating leverage out of that. So that is the point with EBITDA margin. And another one thing is that the management is saying that they are not going to increase their fee in this year. They will see that if the customers activity increase in coming quarters, with that, if their profit margin is getting better or not. If the profit margin is getting better, then they will be fine with that. But if the margin is not improving, then they may think about those fee hike. Okay, so that is the point. Management is saying that in this year there will, if all goes right, then there will not be any kind of fee hike, but in future in FY27, if the profit margin do not improve in kind of 40-45%, then they will think about the fee hike. Okay, so that is the thing management is saying, and that is from that we can extract a thing that if the activity in the market increases, then Angel One will get some kind of operating leverage. That is a extract from this. So that is the thing, because margin expansion means what? It is a operating leverage. Okay, so that is the thing. In terms of PAT also decreased quarter on quarter. PAT decreased by 40%, for not 40%, 35%. Okay, so year on year PAT decreased by 61%, which is not a good thing. But yeah, if the market improves in the future, then obviously they will get some kind of operating leverage. That is the thing. That is the thing. And if I talk about my final thoughts, is like that it is a company to track because they are gaining the market share, but it is too early to say that where all the things will go in the future. That is why I will say that I will track it quarter on quarter. Every quarter I will track it, but for now I am not investing anything in this company, because you never know like it is Angel One. If we see the result, it is in the middle of nowhere, and I think the bad phase is over, but there is a good way to go to the good phase. Okay, so that is the thing here. We have to look at that, and that is why I would say that yeah, the company is doing good, but in terms of the market condition, the regulations, all of this happened because they are increasing their client base. That is the most important thing, and that is the thing broker should do, and they are doing that, but other parameters are not supporting. Okay, so that is the thing. Otherwise it is a good company to track, but not to invest. So that is the thing with Angel One. So that's it for the video. Thanks for watching.